Are we heading straight into recession? The signs are piling up. Inflation isn't cooling, companies are cutting budgets, and economic indicators are flashing red. And yet, the stock market is still rising. But for how long? In this video, I will show you what's really going on beneath the surface of the economy. Whether we are about to witness a crash in 2025, and most importantly, how you can profit from it. I will walk you through the exact investment game plan I personally use when the economy turns ugly. Hey, I'm Dominic and welcome back to the channel. If you are new here, I make videos to help you understand investing and personal finance without the fluff. And in this one, we are talking about something serious, the next potential recession. Let's be clear. Recessions are part of the market cycle. You can panic and lose money, or you can prepare and make money. Let's talk about how to be on the right side of history. At first glance, everything seems fine. People are still spending, companies are still raising prices, and economic numbers look decent. But look closer and the cracks start to show. Inflation is still high, and the Fed is unsure about interest rates. Companies are freezing hiring, cutting spending, and becoming cautious. Business investments are slowing and customer confidence is falling. Trust in the economy is declining and the labor market is cooling. We are seeing a classic setup. The calm before the storm. Even though stocks are going up, the US dollar is weakening. That's a red flag. When dollar weakens while equities are rallying, it often means smart money is bracing for impact. The confidence index is already lower than it was during the pandemic. Many people are spending not because they feel optimistic, but because they fear things will get worse. Most people think a recession equals a market crash. That's not always true. Recession simply means the economy contracts for at least 2 quarters. Companies earn less, people spend less, unemployment goes up, and yes, that can push stock prices down. But that's not the whole story, because while markets drop fast, they often recover just as quickly. Here's the thing. Bear markets are short, bull markets are long. You have to zoom out. Even with all the crashes in the last 15 years, the S&P 500 is up over 420%. That includes the financial crisis and COVID crash. If you held through it all and kept buying, you would be sitting on some serious gains. Let me be real with you. Timing the market doesn't work. You will never catch the exact top and you will never buy at the exact bottom. That's why I don't try. I stick to a simple system. I invest consistently every single month. I buy into diversified ETFs and index funds like the S&P 500, and occasionally I add high conviction individual stocks. 3 years ago I invested in Palantir. Over time my investment 8x'd, but it wasn't smooth. I bought in at $23, averaged up to $33, then watched it drop to 7. Everyone was mocking me, but I kept buying. Today it's back up. That's the cycle. Euphoria, fear, despair, recovery, and euphoria again. And each time the bottom is higher than before. The top too. That's long-term investing. If you are like most people, you probably started investing 1 to 4 years ago. That means you've only seen the good times, so when volatility hits, it feels like the end of the world. It's not. Just like any skill, investing takes time to master. After 1 year, most people think they know everything. By year 4 or 5, they realize how little they really knew. The problem? Most people give up in year 2. They panic during their first market drop. They sell low, buy high and repeat. But if you stick around, keep learning and keep investing, you will separate yourself from 90% of people who give up too soon. This year, gold outperforms stocks. Why? Because of uncertainty, geopolitical tensions, US elections, war. In times like this, gold often shines, but that doesn't mean you should dump your stocks. I personally use gold as a hedge, but my core remains equities. Stocks have historically outperformed everything else long term. Just look at the S&P 500. Zoom out and the trend is up. Let's talk about what volatility really feels like. It goes like this: optimism, euphoria, reality check, panic, despair, recovery. You saw it with Tesla. You saw it with Palantir. I bought Palantir near the top, then it crashed. Most people sold. I didn't. In fact, I bought more under $10. Now it's up again. People are euphoric, but guess what? Another drop will come, and another, and another. But every time, the new low is usually higher than the previous one. That's the beauty of staying in the game. Let's break it down. Here's your recession investment game plan. Number 1. Keep investing consistently. Set up automatic monthly investments. Number 2. Stick to diversified ETFs, the S&P 500, MSCI World, or your favorite index. Number 3. Don't panic sell. If prices drop, see it as a discount. Number 4. Add high conviction stocks, companies you believe in long term. Apple, Microsoft, Google, whatever. Number 5. Hold for the long run. Think in decades, not days. And number 6. Educate yourself. Keep learning and sharpening your skills. And if you are holding cash, now is the time to build your watch list. Look for quality companies. If the market crashes, be ready to buy. Here's the truth. You don't need to predict the crash to profit from it. You just need to be prepared. Most people aren't. But you are watching this video and it already puts you ahead. Whether we face a recession in 2025 or not, the investors who win are the ones who stay consistent and stay invested. So what will you do next? Let me know in the comments. Are you adjusting your portfolio for a potential recession or staying the course? If you got value from this, give it a like and consider subscribing. I post twice a week to help you grow your money with confidence. Thanks for watching and I hope to see you in the next one.